Ashish Chaturmohta is Director, Head of Research at JM Financial Services. Ashish, good to have you with us here. Good morning. How are things set up? Just one point I wanted your thoughts on. FII, net long positions in index futures are over 1 lakh crores now, lakh crore contracts. That is the highest in at least, 2-3 years, if not more. Highest ever. So it's at a bit of an extreme. And extremes, one way or the other, are never good. But prices are still moving up. Would you see that as a bit of a cautionary data point? Ashish, go on.
Good morning, Prashant. So yes, 2-3 indicators. If you look at typically the put call ratio is sustaining above 1.45. That's also into a overbought zone, and obviously the FII long short ratio is at 2-3 year high, which is around 75%. And I think that's a typical high level. But we also need to understand that after consolidating for almost 13 months, we are hitting a fresh all-time high, and generally these kind of consolidation breakout we have not witnessed in the last many months. And when you see these kind of momentum happening, then a lot of these reversal in the data starts to happen. And also, if you look at I was looking into the charts of Dow and Nasdaq, and also this is a very clear decisive breakout which is taking place in these indices as well. So I think eventually this market is turning into a very strong bull market, and what we need to understand is any dip. Yes, obviously dips are possible, because if you see a overbought territory, you might see some kind of profit booking or a consolidation. But eventually the message is that this dip should be bought into, because we are in a very strong uptrend, is what my understanding is. Looking into Nifty indices, if this 13-month consolidation which has given a breakout after consolidating between 18,500 to 15,200, then logically this makes a possible target of 19,500 to 20,000 kind of trajectory eventually. So if that's a positional target, I think any dip should be an opportunity to go long into the market. Coming into my stocks, so obviously I'm also focusing on IT stocks. This we mentioned on Monday, where we discussed about Persistent and Infosys. In today's discussion, we are covering Coforge and Infosys. So I think Coforge is one stock in the mid-cap IT, which has formed a very strong base. And I think the way OI buildup is happening in IT names, it looks like Coforge is poised for a move towards 4,300 kind of trajectory. So keeping 39.20 as a trading stop loss, one can initiate a long in Coforge. 4,200 to 4,300 would be my short-term target in Coforge. In the large cap IT, obviously Infosys is going to take the lead, and there we have seen a very strong monthly consolidation. So keeping 1,605 as a trading stop loss, one can initiate a long. On upside, 1,720 would be my short-term target in Infosys. In the banking basket, I think HDFC Bank has seen a very good consolidation, and now in yesterday's trading session, we have seen some very strong OI as well as volume activity coming into HDFC Bank. So keeping 1590 as a trading stop loss, one can initiate a long in HDFC Bank. On upside, 1670 would be my short-term target. In the cyclical space, I think cement is looking very promising, because petcoke prices are also coming down. So I think now Ultratech Cement has seen a very strong OI build-up, and has given a very strong decisive breakout above 7,000 levels. So keeping 6950 as a trading stop loss, I'm looking for 7,400 as my short-term target in Ultratech Cement as well. So overall, it's a buy list, and I think yes, it can be a gap down. So you can add at current levels, and use any kind of intraday dip to average your long positions.
Okay, all right, Ashish, thanks so much for